Hello and welcome to Stocks Advisor channel. Here at our channel, we're looking for interesting buy opportunities for US-based stocks. Today we'll talk about Moderna Incorporated, traded at Nasdaq, ticker name MRNA. Well, Moderna, of course, is a very well-known company now due to its COVID vaccine. And in general, if you would answer the question, what's the future for it, at least for next couple of years, it's really bright. It will be growing overall. So if you're a long-term trader, you can just buy it and forget it and open in 1 year. But if you're a daily trader, let's say midterm, you need to catch an appropriate wave to make the profit. And speaking of waves, actually now we see, let's have a look. Today we made plus 10.3%, finishing at 86.42. After hours, some small positive volatility, but for daily traders, for midterm traders, is it the right moment to buy? And the question is, I think it's not. It's better to wait, because what's happening now, of course, companies having a steady state growth regime when all three moving averages are going up and price is bouncing at moving average 20 on the top of it. So this is the case indeed, but now we see that the distance between moving average 20 and the current price is extremely high. So it is so-called the boost mode or beast mode regime in positive way, meaning that if you're already in position, yes, it's a nice moment to be there because it's accelerating, it's growing, but it also means that if you look here, it's about 20% difference. But if you are, let's say, daily trader or you want to enter, it's a bit risky, because what might be happening here, the price can suddenly drop and the wave correction will start. Not the general correction, but the wave correction. And what is the wave correction? Here are examples of wave corrections. You can see like one was taking place in May, then also one taking place in June. So these small returns, let's say, towards moving average 20 or 50, these are on the growth regime wave corrections. And that's exactly the case what might be happening. Of course, there are cases of strong wave correction. The one was taking place in December here. Actually, it was then shifting to a real correction with the clear correction channel forming. So it might be happening again. I'm not saying it will, but what I want to say is that we are in the correction regime. It still might give one big spike next week, but in general, it might break down any moment. It could be still a slow breakdown, similar to one that we had in mid of June, but also it could be quite a strong breakdown. So if you would now think of how to trade here safely, when you have a steady state growth regime, meaning that all three moving averages are growing and they are actually forming next, let's say, pattern. So the price is on top, bouncing on moving average 20, then you have moving average 20, 50 and 200. This is the steady growth regime, and until this is the case, if you are mid-long term trader, you are okay. But once it's starting to break, you need to reconsider actually your position, sell, re-enter, or do something. And that's exactly what might be happening soon. We might break a little bit down. And how to buy on these patterns? You just put your two technical, let's say, expected technical levels exactly in the vicinity of moving average 20 and 50. And that would be the case here as well. So therefore, for the moment, it's better to wait for the price to go to these levels. You can clearly see them formed here. So the first one would be between 227 and on the top being 234. Let's skip the cents because the price is quite high here. So we can write here our first call out to enter. So this would be 227 to 234. So this is the first technical pattern. So idea here is that we will wait for correction of the wave and then it's growing higher. And by that moment, it should be very nice rebounds opportunity here, which I would say should be from 10 to 15%. This would be the profit-taking note here. Let's write it already. So we would think for our daily traders, let's say the profit-taking note is from 10 to 15%. Of course, if you are more longer term, you can just keep, because in general, as I said, overall forecast for Moderna is positive, but still long-term waves might take place. Look, for example, here from February to mid of May, it was generally volatile and there was no major growth, though of course volatility was enormous, but if for long-term traders, this was actually that period, meaning that there was no major growth of the company. So this similar situation could be happening there, but overall, it's a very good one. So if you want to catch the wave, better to wait. First level is here. And then speaking of the second level, of course, as I said, should be in the vicinity of moving average 50. And this would be, again, very close to the current one. So it will start from 213, 14, and a bit lower here will be sitting. It will be broader. So it will be 191 to 214. As I said, let's keep cents because it's still the price is quite high with respect to the cents counting. So this will be 191 and 214. You can say both levels are quite close to each other. Indeed, this is the case. They are close. So therefore, for the third so-called risk mitigation correction, if it's happening, if the price declines there due to any negativity, which is not expected at all, and as I said, say always this is the reason why we call first two levels technical and the last one is a risk mitigation, because we can expect first two levels, but we don't expect third one. It's just we keep some funds there to buy if any negative catalyst coming, which could be in the form of bad news, global market situation, the sector market situation. And here again, it would be in the vicinity of moving average 200 because here we have also double support level formed. So the third level, so the level to average down at risk as a risk mitigation will be 136 to 100, let's say 50 almost. As I said, we don't really focus on cents here, just principal levels. So with this being said, these are the levels. So let's write our call out as well. So this will be 136 to 150. In that sense, Moderna is quite safe. You just need to wait probably till the end or mid of next week. We will see how fast the correction of the current wave will happen, and then it would be a right time to buy. So with this being said, these are the levels to buy. And speaking of how to buy through, still here it's a classical 5-portion play. What does it mean? It means that the money you'd like to play here, you can split in 5 portions, then you can buy with 1 portion at the first level. If the price declines to the second level, you can buy with another 2 portions, and remaining 2 portions you can keep for final risk mitigation due to possible negative catalyst, which is the third level. So there, through the third level, you can buy with remaining 2 portions. So this way of trading will allow you, without stop loss approach, take profit, though you pay with time, because when you do stop loss, actually you pay with money for time. When you do this way of trading, you pay with time for money, meaning that you are okay to wait a little bit because we're not looking at 15-minute candles, we're looking only at daily candles, but at the principal level. So you're okay to wait a little bit, but then exit with a profit, or in the worst case scenario with a draw. So this way of trading, you usually don't need to lose money, but you can spend some time. If you like this way of trading, which is usually the case for those who trade with huge amount or big amounts of money, or those who use it as a secondary way of income, I think, it should be also, let's say, very nice for those who seek in YouTube for some advices. Therefore, don't forget to subscribe to our channel, press the bell button, especially if you like this way of trading, follow us, and see you at another episode of Stocks Advisors channel.